I am also a tax strategist, and I've been in the finance industry for over 18 years. As a solopreneur, right, or someone who's an entrepreneur. Hello, Five Family. Welcome to another episode of the Tax Takeover. So, all this month, for the entire month of October, we've been talking about financial planning, and we've been focusing on the 5 areas of financial planning. So, just as a quick recap, right, if you're joining us for this episode and this is your first episode, the first guest that we had on walked us through what financial planning was and gave us a comprehensive approach to financial planning. So we talked to an actual financial planner. Then we had a guest that came on and told us the importance of having insurance. That's right, life insurance, especially for small business owners, and how that is an important part of your financial planning process. And then we had an income strategist come on and share with us how to create multiple streams of income in your financial plan that will take you through your retirement. So today I'm going to be talking about the part that I love of financial planning, and that is tax planning, right? So today's topic is recession-proofing your finances through savvy tax planning for financial success. So if you are joining us for the first time, let me introduce myself. I am Samara Andrews. I am the host of the Tax Takeover. And today we have an incredible, important topic that is going to help you safeguard your finances in uncertain times. We'll be discussing how to recession-proof your finances with savvy tax planning for financial success. So I want you to grab your favorite pen and paper because we are going to have some valuable tips and action items coming your way. So you have to make sure that you stay until the end in order to get the benefit out of this conversation that we're going to be having tonight around tax planning. All right, so first let's start by understanding what tax planning is, right? So it is a plan that minimizes how much you pay in taxes. And when that happens, it's referred to as tax efficient, okay? And the tax planning should be an essential part of your individual investor's financial plan. So again, this is just one role in financial planning. We had guests on to talk about the other roles, but tax planning is also an important role as well, which is why I wanted to take time and walk you through this for tonight's episode, right? So, number one, the first thing that you need to do is assess your current financial situation, all right? The first step to recession proofing your financials is assessing your current financial situation. So I want you to take a look at your income, take a look at your expenses and your investments, and analyze how they would fare during a recession, right? Are there areas that you need to improve, right? So let's do a deeper dive into that, right? So I want you to carefully review your bank statements, your investment portfolio, budgeting tools to determine if any adjustments need to be made. Now, during this examination, I would also suggest that you enlist the help of a professional, like a financial advisor, all right? Like our prior guest, Dr. Noni. A good financial advisor, such as Dr. Noni, is going to help you provide a more visual impact on how your current financial status would be affected by a recession, right? You should also consider how your financial structure, will affect your taxes right now and in the future. Hopefully you're not in a financial struggle, but if you are, you're in the right place because we can help you get out of that too, right? But definitely sit down with a professional so that you can get some good visual aids to help you work through your current structure and help you work towards a goal of where you want to be. Okay. Now, action item number 2 is I want you to create an emergency fund and a tax fund. All right. So building an emergency fund is crucial for weathering the financial storms. So in the recession, right, in this recession that we're in, and I'm not sure if anyone has officially called it a recession, but it is what it is. Unemployment rates have been high. We've also seen inflation out of this world. When you talk about mortgage interest rates, car loan rates, all these things are being inflated, and it's definitely playing or taking a toll on some of our pockets, right? Even the price of groceries has gone up since 2020. So definitely we are in a time where you're now having to do a deep dive into your financials to make sure that you can weather the storm and you can come out in a good place, right? So building an emergency fund is crucial. It's crucial for weathering these financial storms. It acts as a safety net during difficult times, right? So you can start by setting aside a portion of your income each month into a separate account designated for emergencies. So what that means is you should not be dipping and dabbing into that account, right? You can have a savings account where you can pull money out from time to time, but your emergency fund should only be used for cases of emergencies, right? So I would suggest that you create a separate account for taxes as well. So this account should be funded as often as you are paid. So think about that. So if you get paid twice a month, right? You get paid bi-weekly, then every time you get paid, you should put a portion of your income aside to cover for taxes. Now, this is a great practice or rule of thumb if you are especially someone who is a small business owner or you're a 1099 contractor and you're having to pay for your own taxes, right? Cover your own taxes. You definitely want to put this into practice because it's easier for you to save a little at a time, right? Then at the end of the year when you do your taxes to try to come up with this large lump sum of money in a short period of time, right? So definitely take that approach of putting aside money for your taxes as often as you get paid, all right? So again, putting aside this money for your taxes is a huge part of healthy tax planning. So tax planning is not just about trying to eliminate taxes, but it's also planning for the event that, guess what, you may have to pay taxes. And so we're going to put that into the plan as well, right? Now, I do want you to make it a habit to contribute also to your emergency fund and your tax funds, ensuring that it grows over time. Aim to save in your emergency fund at least 3 to 6 months worth of your living expenses, all right? And then again, plan to put away your estimated taxes in your tax fund, all right? And in addition to putting away those estimated taxes, make estimated quarterly tax payments from the fund, right, to your respective tax authorities. So if you have state income tax, make your estimated payments to your state tax authorities. If your federal taxes, do the same, right? So definitely, like I said, this rule of thumb is going to help you plan accordingly. Okay, and it's going to put you in the best situation, especially as a taxpayer, so that when you are going through a low point, maybe in your business or in your finances, you have done the planning, you've been savvy with your finances so that you can weather these storms, okay? So action item number 3 is maximizing your tax savings through deductions and credits. Now, this is what everybody tuned in for, right? They want to understand, Samara, I'm good. I understand I need to save. I understand that I may have to pay taxes, but I want to pay the least amount of taxes as possible, all right? So you're in the right place. So tax planning plays a vital role in the financial success, especially, right, during these times, especially during a recession. So by optimizing your deductions and credits, guess what? You can lighten your tax burden and keep more of your money in your pocket. So let's explore some options that you can do that. And what I wanted to point out is some options that would not require you to be an itemized tax filer. Okay. And for those who are joining for the first time and never heard that term before, an itemized tax filer is someone who usually has to file a Schedule A with their tax return. And it means that you're going to have more deductions to write off than the standard tax deduction. Now, in earlier years, that was a very easy target to meet, right? But recently, when they raised the standard deduction amount, it's been difficult for most taxpayers to become or to qualify as itemized tax payers, right? So that's why I wanted to give you some credits and some deductions that may not require for you to be a itemized taxpayer, right? So consider you utilizing deductions and credits such as student loan interest deduction, maybe your saver's credit, or a premium tax credit, or an energy efficient credit whenever you make energy efficient updates to your home. So the things like a student loan interest, a lot of us have student loans, right? And they just recently said, turning back on the student loans, now you got to make your payments. That actually went live in October. And so for us now, we're going to be paying that student loan interest. So that's a deduction that you may want to consider taking to lower your taxable liability, lower your tax liability, right? Same thing with your savings credit. A saver's credit is something that you get when you contribute to a retirement plan, like a 401k. So definitely make sure you're taking advantage of that 401k. I love what Dr. Noni said when she was on the show. She was saying, don't leave money on the table, basically. Make sure that you are making contributions to your retirement account up to what your employer is going to match. And so I would tell you the same thing. Do that, and make sure that you're in a place where you can take advantage of the savers credit, right? Then they also will have a premium tax credit. So this credit is for those who are getting health care on the marketplace. There is a premium tax credit that you can receive, right? And for you getting health care on the marketplace. So make sure that you're taking advantage of these credits. If you are doing energy efficiency updates on your home, maybe you put in solar panels, right? Maybe you made your windows more energy efficient. Make sure you are utilizing your credits, okay? You want to make sure that you are putting yourself in the most tax advantageous position. So I want to make sure you're taking advantage of some of those credits. And all those credits that I mentioned, guess what? You do not have to be an itemized tax filer to take advantage of those credits. All right. So action item number 4, invest in tax advantaged accounts. Right. So what does that mean? So, one of the best ways to recession proof your finances is by taking advantage of tax advantaged accounts. Now, these accounts provide a variety of tax benefits, and they also help you save for retirement or education. So, we talked about before the 529 plans, right? We've talked about 401ks, we've talked about IRAs, right? So contributing the maximum amount allowed to your employer-sponsored retirement plans, like a 401k, right? And setting up an individual retirement account, an IRA. This will all help you explore tax-advantaged options, right, for your retirement. And don't forget about the 529 plan. I did a whole episode about the 529 plan and how you can set that up, right, for saving for education. And now in 2024, they have an added bonus to the 529 plan for those who maybe your child doesn't want to go to college, but now they can convert that 529 plan over to a retirement plan, right? So these accounts provide tax benefits and help you secure your financial future. So I want to make sure that you're not leaving money on the table, Five Finance family. These are just a few items, a few things that you can do, right, to start planning for the future and also make it a little better for right now. Like I know for the 529 plan, especially in the state of Georgia, that you get a tax benefit. You get a credit for contributing to those types of plans. And I talked about the savers credit, right? That's the credit you get for contributing to your 401k plan. So definitely understand that not only are these plans setting you up for future success, but it's also looking at some benefits that you can take advantage advantage of right now in real time, right? So that's it. Congratulations. You've taken a significant step towards recession proofing your finances through savvy tax planning. So I want you to remember that regular assessments of your tax plan, of your financial situation, things like building an emergency fund, maximizing your tax savings, and investing in a tax advantage account, they can significantly contribute to your financial success. Okay, so I want you to keep up the hard work. Remember, like I said, it doesn't matter where you are in your financial journey, you can start tax planning today. So thank you again, Five Finance family, for joining us, right, for another episode of the Tax Takeover. Before you leave, do not forget to like this. If you like this episode, make sure you hit that like button. Make sure that you are also subscribing to our YouTube channel, and make sure that you are sharing it with someone else, especially if you know that this information is going to be a benefit to them. Okay. Also, make sure that you are visiting us on LinkedIn. You can definitely like us and follow us there, where we share some more good content, and we also share our newsletters on LinkedIn from time to time. And last but not least, if you want to connect with yours truly and come up with a tailored tax strategy for yourself, then make sure that you are visiting our website, and you can go to www.fivefinance.com/booking, and you can book a tax strategy call with yours truly, right? So again, thank you so much for joining for another episode of the Tax Takeover. It was short and sweet, but I hope that it was helpful. I hope that you were able to kind of get an understanding of some things that you can start, right, in order to recession proof your finances through the power of tax planning. So thank you again for joining Five Finance family. I hope you have a blessed and wonderful Tuesday evening. And until next time, happy tax planning.